The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the March 28th fantastic Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, truly, that's what it's all about. It is Friday. Let's all have a fantastic weekend. Let's go look at one of our tools. This is the tool I call Achieving Our Dreams. You know, maybe you've never thought about it like this, but if we look at the overall pool of the universe of mankind, we'll find that most people spend the majority of their lives struggling to earn a living, whereas there's a much smaller number that seem to have everything going their way. Instead of just earning a living, this smaller group is busily working at building and enjoying a fortune. Everything just seems to be going their way. Now, have you ever wondered, well, what do you think the larger group is thinking? What do you think they're thinking? I think they're thinking, how can life be so unfair? How can it be so complicated? How can it be so unjust? You see, the question is, what's the major difference between these two groups? Well, here's my thinking. Despite all the factors that affect our lives, like the kind of parents we have, the schools we attend, the part of the country we grow up in, none has more power for affecting our future as our own ability to dream. That's right, our own ability to dream. You see, dreams are a projection of the kind of life that each of us want to live. In fact, dreams not only can they do drive us. Dreams are what allow us to skip over obstacles. And look, the universe is always going to throw obstacles to us. When you're trading and investing in the markets, how often do you see obstacles? That's right, all the time. When we allow our dreams to pull us forward, well, they unleash this creative force that can overpower any obstacle in our path. So here's the key. In order to unleash the power, our dreams must be well-defined. Because a fuzzy dream, a fuzzy future, it's got little pulling power. Well-defined dreams, they're not fuzzy. Wishes are fuzzy. So in order for us to really achieve our dreams, they must be vivid. I mean, multicolor, 3D, the whole 9 yards. That's why, you get to New Year's Eve, you make a resolution, right? Maybe that's a dream. If it's not a well-defined dream out there, how often do you achieve those resolutions? Yeah. But if you make them vivid, if you make them multicolor, 3D, if you make them, got to be well-defined. Let me put it to you like this. Let me ask you this question. Have you ever hiked a 14,000-foot peak in the Rocky Mountains? If you have, it's no easy task. And if you thought about the settlers of this great country, you might just say to yourself, how the heck did they do it? I mean, how did the settlers haul all of their worldly goods, plus all the food, all the water, mile after mile, day after day, week after week, month after month? One thing's for sure. They had dreams. They had big dreams. They had big, vivid dreams. It's all about finding a formula, folks. You see, their dreams were stronger than the obstacles that were in their way. Yes, the quickest way for us to learn anything is to always link the known to the unknown. I do it through story. Come to think of it, the stock market tells a story minute after minute, doesn't it? That's why we always want to make sure that when we come to trading and investing that you stay with inside the time frame that you're trading on. So it is the weekend, folks. And I say, go be a dreamer. Envision your future and be willing to put yourself through the paces of doing the uncomfortable until it becomes comfortable. Our great country was founded on dreams. And those same dreams, they're alive and well today. So let's go live the dream, folks. Let's check out the dreams inside the markets here. Right now, we've got Dow futures up 33 points. They're trading out at 16,215. S&P futures, they're up 5.25 points. They're trading out at 1840, about 1846. NASDAQ futures up 13.5, trading out at 35.67. We'll start off the day taking a look at the NASDAQ. We need to do that because that's the weak link. So we're going to get information about the weak link with regard to what the market is going to do today. Goldilocks back $4 right now. It's trading at 12.90. Silver's up 9 pennies, trading out at 19.80. Gold, that's trading up 61 cents. Yesterday we identified a Gartley sell pattern. Light sweet crude is making its way up to that level. Quick peek across the globe out here. Let's see what we got going on. Over in Europe this morning, flat market in the FTSE. It's up 5 points right now. DAX is up 78 points. It's up 0.8%. Over in Asia last night, you had the Nikkei finish up 73 points, 0.5%. The Hang Seng up a little over 1%, up 231 points, and the Shanghai down 5. Our call number is 877-927-6648. Feel free to give me a call, folks. Happy to answer your question. Take a look at your stock chart. Let's start off by taking a look at the 120-minute chart here for the NASDAQ futures. Right now, they're trading out at 35.66. Now, if you're watching us on Tiger TV, thanks so much for doing so. If you're listening on the radio or your mobile device at TFNN.mobi, we appreciate that very much. Let me describe to you what it is we're looking at. Of course, remember, you can always catch the live stream of this show by going to the homepage of TFNN.com. And right after you sign up for Andy's workshop this afternoon, then you go ahead and click on Tiger TV. And switches or over in the upper right-hand corner, you'll see a button, 3 little smartphone devices. Click on that. This show will stream live to you. And, of course, you can catch the archive on Channel 9. You go back and replay it. Now, on my screen out here, I'm showing a couple of different things. Number one, the key level to be looking at, this is a 120-minute time frame chart that we're looking at out here. So really always depends on the time frame that you're trading. If you're an intraday trader, it's okay to be short here right now. What you want to be watching is about the 35.86 level, 35.87. If you see it close above that, again, it's a 120-minute chart, so you got to let the time frame play out here. I can take a look at a 30-minute chart, but right now we're just going to stay with the 120-minute chart, 2-hour chart, pretty decent time frame to be making your decisions on. That 35.86 should be resistance. That's part of the TAS signal box, which I've got live on my screen here right now, and you know the expression, old support becomes new resistance out here. And that's exactly, if we take a look at these intra-session levels, that's exactly what we're looking at right there. That 35.86 level used to be old support. In fact, if you come back here into the time frame here, that would be, let's see, about 12 noon. That was on March 24th. Price had moved down there. We saw it move down really with a vengeance here in the prior bar, the prior 2-hour session, the 10 o'clock bar out there. Moved down with a vengeance. That level acted as a support. You can see that acted as some nice support. Moved right up here into this little light blue line out there. That's the kind of like a... the way I take a look at it, it's where the largest number of trades were firing off, kind of like a primary trading range boundary line out there. That seemed to have just simply stopped price, and that area was broken. The support area was broken. It was broken here with a little bit of conviction at about 2 o'clock in the afternoon on March 26th. You can see when price was, as we were closing out the session there, you can see how price moved right up there and ran into that resistance area. So 35.86 if you're long. 35.80, and there are reasons. I can give you reasons to be long. We'll go take a look at that. 35.86 would be if you're long, you want to see price get above that. If you're short, you do not want to see price get above that. Why? Because what it's likely to do, I can tell you what, you can stay short, or I can tell you where price is likely to go to. That way you can make a value decision. That value decision says probably in that 36.20-ish level, 36.20, 36.24 out there. That's likely where price would head up to. So if you were to see that, if you're longer term short, for whatever the reason is, you just need to know what's going on from an intraday standpoint. You need to know when areas of resistance get taken out, because maybe that'll help you to change your trade out there. Now that's what the daily chart is showing us. If we look at the weekly chart as well, the daily chart as well. The daily chart says, hey, you've got some real strong resistance. You should have strong resistance at about 36.15 out here. So on the daily chart, that should be the number that you take a look. Now, what do we know about the NASDAQ futures? Well, we know a couple things. Number one, yesterday, while we were on the air, it was completing a 1 to 1.272 A to B equals CD to the downside. The 8-point on this happens to be the swing here from March the 7th. That number was 37.3325. Makes a move down into March 17th. Gets down to a low of 36.02. Makes a retracement up here. I think on this tool, I got to see if I can maybe change this tool. I made this tool here special for the eSignal software. I want to see if I could just add a tool here. It tells us exactly what the retracement is of that C leg lag out there. So I'll see if I can get that work done over the weekend. In any event here, that becomes the C point, the swing point where the market turned lower, 37.1275. This made more than a 1-to-1, A to B equals CD. So far it's made a 1 to 1.272. It's found a little bit of support here. If it can close above yesterday's high was 35.8525. That would be short-term bullish. But remember, old support becomes new resistance out here, and that 36.15 level really becomes key. So on the daily chart, as long as price stays below 36.15, it says it's okay to be short out here. You start getting above that, then you're looking at 36.54, and your real resistance level being at 36.80-ish area. So that's on the NASDAQ, and that's important for us to be paying attention to here because it's been really the leader on the way down. If we go take a look here, in fact, you might say, hey, where would there be a reason that you could actually be long here? Well, if we go take a look, and we pointed this out yesterday, so let's go ahead and put this chart up on the screen. Let's take a look at the 120-minute chart here for the NASDAQ futures. We'll use the Rhodes Momentum Indicator signal system out here. This is the 120-minute chart. What we know that took place yesterday morning was price was also making a lower low and doing it with what? Doing it with less relative strength out there. Whenever you do that, you get what I refer to as a price relative strength divergent patterns. They are great to be aware of because they oftentimes call tops and bottoms of moves out here, short-term moves, long-term moves, whatever you want to take a look at. Now, yesterday, what we had said is the key yesterday was being able to get a close above the level of about, what's that, high 35.78 being the number. Now, I'm not keeping track of all the numbers that I've just given you here. Hopefully, you're the one that's jotting those down out there on your piece of paper out there. But what we can see out here, and that's really key, we are not above that. We got that during that 10 to 12 session yesterday. The bulls tried to do everything they could to push it up over that area. They were not able to do that. We've seen some small little bullish reversal signals here in the overnight hours, but right now it's a real toss-up. The earlier numbers of resistance, those are key. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. If one of the reasons to be cautious if you're short here as we speak, and we're really taking a look at both sides of the trade. That's really what's important to do. If you get yourself so focused on one side of the trade and believing that you're right, you're doing yourself an injustice, because what you want to be able to do is you want to take a look at different stock charts, different time frames, understand what's going on. This is a business about making decisions about information that gets presented to you. A couple days ago, I think it was inside the Tiger's Den, somebody made a comment or something. I don't remember if it was about gambling or something like that. My reference, when I tell people what I do, what they often say is, it's just like gambling or what have you. And remember, the easiest way to teach somebody something is to link the known to the unknown. Now, I don't know if you've ever been to Vegas or you play some of the different games out there, but so many people like the game of blackjack. So I like to be able to use the story to be able to link the known to the unknown. I like to be able to differentiate gambling from what we do in the stock market here in the different markets. Come on, it doesn't matter what we actually do here, and certainly do on the radio show. Is if you take a look, if you sat down at a blackjack table, wherever it might be, and you were dealt your 2 cards, the dealer was dealt their 2 cards, you went ahead and you put your bet out on the table, and you get to see what the dealer's got. And at that stage, you see what the dealer's got, right? So that's at the time where you go ahead, you make a trade. Right at that moment, you say, I'm going to make the trade. And then the very next thing that happens is the dealer turns their card over. It's like looking at a stock chart. At that point in time, even when you've entered the trade, for whatever reason, now you know what the dealer's got. Could be the very next tick out there. You can take your money off the table. Now, you can't do that in Vegas, but inside where you're making a trade or investment, guess what? You can take your money off the table, and all you've lost is a little bit of an insurance cost, right? The cost for the transaction, that your broker charges you. That's your only cost out there. And then what happens is, let's say, they're holding an 18 or what have you, and you've got a 6 and a 7. You got a 13. And you say, well, I got a hit, right? You hit, and all of a sudden, you get a 4, so now you've got 17. At that stage, okay, you can still decide to take your money off the table. That's going to be the next tick. That's going to be the next bar, perhaps, if you're trading intraday or what have you. And maybe you have a little bit of a cost, but you can at least take your money off the table. Gambling, you can't. You've got to make a decision. Because you're all in once you make that bet, right? That is not the case inside of the stock market. That's why I want you to understand technical analysis and take a look at the different tools. There's so many great tools here that are offered at TFNN. I like using them all and trying to link them and put them all together just to give us a better opportunity. Well, if you listen to this show, and if you do, I'm grateful that you do. Otherwise, obviously, if you don't listen to the show, you're not even hearing my words right now. But you know that one of the liquidity gauges that I use in the marketplace is the Euro-Japanese yen. So a reason to be cautious as we speak right now is it has tried to bust out the breakout session. Breakout session, by the way, nice long-ranging bar out here. And this still has got a bearish pattern in it. So that's why you've got to take a look at different time frames. That bearish pattern being that Gartley sell, that 0.786 Gartley sell pattern. But the breakout session took place on March 6th, the low there being 140.41. It has tried to break. In fact, it tried breaking it last night and even this morning here. And guess what? Price is being rejected at that breakout. Quite frankly, if we were to just open up the book of timing the trade charts out there, whichever version of Tom's book that you might have, he'd tell you could make a fortune just buying breakouts. You know, breakouts that's when you take a look at a gap up, gap down. Well, we're talking breakouts here. Gaps up are nothing more than breakouts. That's why when you say, gaps get filled, it just means price is coming back to the breakout. He'd say buy the breakout, right? As long as it's coming back on light volume out there. Well, in the currency market, we don't have volume. So what we do is we really have to be experts at taking a look at the candle signals and recognizing where breakouts begin, when they fail, what does that mean? So you've got a bearish pattern out here, but the bearish patterns have only been able to push price down into that 140-ish level, and it keeps holding. So at this stage, the information that we've got right now is we know that price has not been able to break things down. So we'll see whether the cues, and I say paying attention to the cues this morning is very important. It'll probably, by 10:30, an hour after the market opens, we'll have a pretty good idea for what the message of the markets are. Look, that doesn't mean that it can't change at 10:31, but, after an hour of trading, we'll have a pretty good idea. Right now, what the euro-yen is communicating to us is not that a market is getting ready to crack and continue to move lower. It doesn't mean that it won't. It just, here's what this currency pair. Now, we talked about, or I mentioned oil yesterday and a pattern. If we take a look at one of our other tools here, if we go back to the shorter-term chart, so let's take a look at the daily chart here, because daily is going to trump the intra-period session. And right now, this shows that light sweet crude has got a significant resistance level at about 102.93. 102.93 is the number to be paying attention to there. If I switch over and we take a look at that Gartley sell pattern, let's see if I can do it here real quickly. Where did that come up to? That's at about 102.38 or so. So between 102.38, 102.93, light sweet crude should find some significant resistance. Can't clear that area. That, in fact, may be a Gartley sell. And maybe we should look at SCO. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow trading up 26 points, trade out at 16,290. S&P up 4, trading at 1853. Composite up 9 points, trading at 4160. Russell 2000 up $1.60, trading out at 1153. We've got leading the charge, the upside, Restoration Hardware out with earnings here. They generated, net revenues $471 million versus $398. Nice going there. A nice store if you've never been inside a Restoration Hardware store out there. Net income $26.6 million versus a loss of $28.4. That is a big turnaround. Let's take a look at the daily chart out here for Restoration Hardware. Let's try to get a gauge for where it is headed to. Now you can see here's the same signal boxes we were looking at on the NASDAQ futures. We looked at it on light sweet crude just to give us a area of some resistance out here. If we take a look at you can see where the support level, the green line at the bottom of my screen, which was 62.33, how that has held as support. Now, you had some pretty decent volume yesterday. Volume yesterday was... Where's that number out here? About 2.7 million shares. But let's take a look at this morning here, this thing is up already. It's done 827,000 shares and is taken on a B point of an A to B equals CD. That is from the date of March 13th, and that had 1.2 million shares. So it's got the volume. So let's go take a look at an A to B equals CD projection on this. Our A point here is going to be the low. We'll use the low here from February 5th. That becomes our A point. Our B point is going to be this session that took place on March 13th out there. There's our B. And our C is going to be the pullback actually from March 24th. So let's take a look at it. So the 1-to-1 A to B equals CD projection on this ought to take Restoration Hardware up into about the $75 level. 75.01 is going to be our 1-to-1 A to B equals CD. Now, the way that it's come off of that C point with the volume here, what that really says is this stands a real good chance of moving up into the 78, 80-ish type level. Let's see what we've got going on a weekly time frame out here with inside of Restoration Hardware. And so at that 78, 80 level, that's going to take us all the way back into the swing point highs out here. You've got a swing point high on a weekly basis on September 9th, 2013. And the high there is about 78.50. So it's going to go ahead and attack that area on a weekly basis. Looks like about 9.5 million shares out there. This week, I've got good volume in it so far today, but only about 6.2 million shares out there. So that's what's going on with regard to Restoration Hardware, but not a bad-looking stock chart whatsoever. Let's see, what else do we have moving here this morning? You've got Google's up about $8 right now. Tesla's up $6. Solar City up a couple of dollars. To the downside, we've got Palo Alto Networks. PANW is the ticker symbol. They're down about 3.5%, off 250 right now. Let's see what this thing is moving back into a breakout area that was. Let's take a look at the daily chart here. So we can see that this thing had a nice high-volume breakout session. This was on March the 7th. The low of that is 68.10. You've tested that area right now. Volume so far today, about 222,000 shares. Again, you got 7.5 million shares out there. So this may find some decent support out here. If this level fails, no A to B equals CD. So at this stage here, what Palo Alto Networks has is a consolidation. And right now it's trading towards the bottom of that consolidation. So this ought to find some pretty good support in this level where it's at. If it breaks through this area, where will it likely head back to? I'd have to say you have to come back to this other high volume daily bar out here from February 6th. And that's why the top of that bar also with volume, by the way, the top of that is the high is 67.62. So that's why Palo Alto Networks ought to be able to find some pretty decent support inside of this area here. Have a request to go take a look at United Rentals. So let me switch over to this chart right here. URI is the ticker symbol here. Let's go take a look at United Rentals, see what it is doing here this morning. It's up about 0.5%, up 35 cents. Let's take a look at the weekly chart or the daily chart out here. So United Rentals trading out at 91.27. It's trading off of its session high. It opened this morning at 95.60. Volume so far today, about 6.3 million shares out there. It is there's nothing bearish about this as we speak on the daily chart out here. Let's put this on I'm looking at a weekly chart. My apology. I'm looking at a weekly chart out here for United Rentals. Let me put this on the daily out here and see what's going on the daily chart. So, excuse me while I get used to the new charts out here. Okay, so now we're taking a look at it. So you got United Rentals out here trading right into a support level. So this has got some support at 90.18 on the daily chart. If it breaks the 90.18 area, this thing ought to move down to its next level of support. Probably, well, you've got some support at 83.48. I'd have to take you all the way back, really, though, to the trading session from February 3rd. That's the one that sticks out. That's your volume bar that you'd be taking a look at. And the high of that candle is 81.53. The low is 74.32. But right now it should be up some pretty decent support, and that is on United Rentals. And that was taking a look at the daily chart out there. Now, since we're at the end of the week out here, let's go put up some of the Rhodes momentum indicator signals. So we're going to close the week out here. We'll go back. First, I'll just go back to the NQ, right? So let's do that, and that way we can take a look at the intraday chart out here, right? We're going to take a look at that 120-minute chart. We'll put that back up on the screen. So as we take a look at the NQ, the decision-making to be made is, we're getting close to that area, that 35.86 range. So if you see it close above 35.86 and you were short on an intraday type of a trade, I would tell you you would have been given a signal to not be short. To be not necessarily don't have to be long at that stage, but you would get up above a resistance area. Now, we're not there yet. So with regard to the bounce that we're seeing here in the market, it's a nice bounce. No question about it, and I think that one of the tip-offs was the Euro-Japanese yen currency pair, not being able to bust out the lows out there. Strong message of the market. Now we know that there should be a first line of defense by the bears at about 35.86. You're trading at 35.81 right now, so we'll see. I don't know that I'll be with you. I don't know what's going to happen in the next 19 minutes or so. It's not even 19 minutes, but that's the level that you want to be paying attention to. Now, what I did want to do, though, is say, hey, let's go take a look and see really where we're at when we take a look at the message of the markets out here. And let's take a look at some of the indexes. Let's move off of the futures. Let's take a look at the S&P 500. So let's take a look at the S&P 500. Let's start off by taking a look at the monthly chart. because we're going to end the month on Monday. We want to try to understand what kind of damage has been done out here. So here's the monthly chart. And if you were to look at this monthly chart right now of the S&P 500, can you really give me a reason to be bearish on the longer-term basis? Now, this is important, and it's important because we have so many different listeners that are making decisions, perhaps making decisions about their trading and investing based on their time frame. So if you were managing your longer-term 401k time frames out there, you would have to get rid of all the noise that you might hear out here and just simply come take a look at the stock charts out here. And so we're going to end this month, if we close Monday right around this level here, 1861. Close to what looks like a doji candle, but that's not a reversal candle. That would do is just set up some resistance. The only real reversal candle that we had, let me get my crosshair out here, inside of the S&P 500 on a monthly basis was back here in January, and you're up above that level. The high of that is 1850.84. You're at 1861 right now. You're at 1861. There is absolutely, on a monthly chart here, the trend is still up. The trend is up, and it's up in a big way, and on the monthly chart, you're up. You don't have price relative strength divergence or anything, not at least the way that Stevie takes a look at it out here. There are others that might tell you that you've got it, but I'm going to tell you I'm going to tell you the way that I look at it, and having gone back through decades of charts out there, that pattern really it doesn't exist out here. So no reason here on a monthly chart. Now, that picture's going to change, perhaps as we go take a look at weekly, daily charts out here. Because remember, a change in trend is not going to appear first on the monthly chart, right? But you have to understand the monthly chart trend is going to be extremely important out here. So then we take a look at the weekly chart. And on the weekly chart, we do have a price relative strength divergent pattern out here. But that price relative strength divergent pattern, that formed here the week of March 14th. And it got absolutely no follow through. All that it did during that week was it came down to what? To a level of support as we take a look at it. So it came down to a level of support. The bears were not able to mount any charge to really push price lower out here. And this week we also don't see much in the way of any kind of a follow through out here. So do we have a signal that the market, that the bears are trying to take hold and trying to push the market lower? We absolutely do. We don't see it on the monthly. There's no reason to be afraid if you were taking a look at the monthly chart. And the weekly chart, even though it gave us a signal, it's saying inside the S&P 500, hey, not so fast out there. I wish I was not so fast when I was picking my March Madness picks out here. Although I could have all final 8 teams out here. So I'm still in place to be able to have all final 8, which would be pretty nice to at least to have done that. I don't think I get even a hearty handshake from Warren Buffett for doing that. I guess maybe that's not too hard to do, huh? But let's take a look at the daily chart out here. Although I would take a hearty handshake. If we take a look at the daily chart here, daily chart, even inside of the S&P 500, we don't have a bearish signal here yet. We do not have that inside of the S&P 500. I cannot, we saw price here yesterday try to make its way down to the 50-day exponential moving average here, but the trend here at this stage is really just consolidating sideways. We have not seen this thing crack on a daily chart to the downside out here. So if you use the S&P 500, if your funds, if your accounts were tracked to the S&P 500, I don't see it. I don't see it to the short side in the marketplace, and especially as we right now where we're trading. It could be a whole different picture at 4 o'clock. All that we can do is use different tools and say, hey, here's where we're at as we speak right now. Now it's a different case here inside of the NASDAQ, right? That's why we really want to be paying attention to the NASDAQ. So let's take a look at the composite. So let's do that. Actually, yeah, let's look at the composite, and then I should have enough time. I'll try to just speed this up a bit. We'll do the New York Stock Exchange as well, right? So when we take a look at the composite, the daily, absolutely selling pressure. You see what? You see these Rhodes momentum indicator signals, these little green boxes, tells you buyers or sellers are in control. Absolutely. Of course, you know that. Now, what is that going to take in order to start to get into a potential bullish mode? Well, look, closing above yesterday's high is one beginning of that. That means 41.86, but that doesn't mean you jump all in bullish. You'd have to see the NASDAQ, the composite I'm talking about, get above 42.39. You get above 42.39, and then, you know what, maybe the bulls are able to actually mount a charge. But the NASDAQ composite, if somehow you were benchmarked to the NDX 100 out here, yeah, you've got to be concerned because there's absolute selling. But we know that As we took a look at the NQ, what did it do? It formed a 1 to 1.272A to B equals CD down. Says you've got some pretty decent retracement here. That's what the daily chart shows us. How about the weekly chart for the composite? The weekly chart for the composite, look, it does have the price relative strength divergent pattern. It does have follow through, which is this week. Closing below 41, I can't even figure that out here. Right around 41. 93, 94, 90. We'll call it 41, 98 or so. Closing above that level would do a lot to kind of say, hey, the bears have maybe lost some of their oomph to the downside out here. If we take a look at the monthly chart, let's put that on here, and monthly chart for the NASDAQ Composite. Okay, so we're going to end the month on Monday. If you take a look at this, there's not a reversal candle signal. Maybe you've got the pause button, bearish harami out here, but that's all. There's nothing bearish about the NASDAQ Composite. Now, it's not unusual for the NASDAQ Composite to have done what it's done. What do I mean? What does Stevie mean by that? Well, look, if we just come back over here and we take a look at the NASDAQ Composite, give me a moment here, pull up the chart, because we're going to take a look at the longer term out here. The longer term chart, what we know is that the composite got up and it tagged and it touched the actual ultimate swing point, which was March 31st of 2000, a low of which is 43.55.69. It tagged that area this month. It got up to a high so far of 43.75 and rejected that area. So the NASDAQ Composite, but no bearish reversal signal. If you take a look at these other times that the NASDAQ Composite has generated this type of candle, you'll see that the following month, it just simply continued to motor on higher. So what's going to be key here as we take a look at April, okay, if we take a look at April, is if it gets inside that 43.55.69. Let me tell you, folks, that actually, now the 100%, the measured move of the composite, once it broke through its consolidation, its long-term consolidation, was to take us to 4,400. So in essence, it almost made that, very close to making that out there. So the measured move, but remember, measured move is you're going to make it equal to or greater than. So at this stage here on the monthly chart, not having a bearish reversal signal inside the composite, and this is the weak link out here, hey, it's just got to make you say, something to think about. At least it makes me say, something to think about. Quick peek here at the New York Stock Exchange. Let's pull up the monthly chart for the New York Stock Exchange here. Let's go see what its candle formation looks like. And, hey, guess what, folks? No bearish reversal signal there. It's trading out at 10,373. Let's peek at the weekly chart here before we end up going into this hard break right here. Yeah, you've got a price relative strength divergent pattern, but guess what? No follow through after the week of March 14th. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls us with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. We've got the Dow's up 108 points. The S&P is up about 12. NASDAQ Composite looks like it's in the NDX 100. They're leading the charge here to the upside, up about 0.9% inside the NDX 100. It's up 32 points right now. Pretty decent market breadth day right now. Inside the New York Stock Exchange, it's up 1,500 net advancing issues right now. Needs 1984, I believe, is the number. That's a good year, huh? 1984. Isn't that a David Bowie song out there, maybe? Needs 1,984 net advancing issues in order for the bulls to effectively take control of the New York Stock Exchange. So that's what you're going to be looking at, at the end of the trading session out there. If we take a look at the euro Japanese yen, yeah, I mean it certainly has moved off of that bottom, not being able to bust it out to the downside. Now, resistance here has been right around the 141.95 level. So that's going to be truly the area where it needs to break through. You can see the tops of the sessions here from March 17th, 18th, 19th at the intersession, as well as on March the 24th. That basically has stopped price in its place out here. So in order to see a significant bounce in the market, that's really what you're going to need to see out here is a move above that level, and that's what I would be paying attention to. Otherwise, we're just in this jostling market here where we're up 100 one day, we are down 100 the next day, a little bit of a roller coaster ride out here. If we take a look at the VIX index, let's take a look at that. You get a combination of the euro-yen moving higher. You get a combination of net advancing issues more than 1984 and the VIX index below the 50-day exponential moving average, which is below here right now. Right now it's trading at 1381. The 50-day is at 1480. What I can tell you is the last 6, 7, 8 sessions or so, the market has been able to make its way back and close right on that level. So it would not be unexpected to see all these gains be given back and actually make it close right around the break-even-ish range out there. So if it doesn't do that, and you get you stay below the 50-day, you get 1984 net advancing issues, and obviously with the euro yen continuing to power higher out there, you're going to see a pretty decent bounce continuing on at least through the end of Monday, maybe even Tuesday, Wednesday out there. So folks, stay tuned. We've got the Nadex Bull Bear Binary Option Hour out there. For those of you that want to trade commodities, get over to the homepage of TFNN.com. It's not too late to sign up for Andy Heck's workshop. That is this afternoon, or begins, I believe, at 12 noon out here. And look, if you can't attend, you can always, it'll be archived on your members page out there. So if you've got any interest at all, and with regard to the commodity sector out here, I think the potential best trade that we're looking at setting up is going to be in light sweet crude. We're looking for it to get up into about the 102.38-ish to 102.90, I believe, was the number. So 60 cents, that's not a big deal. So far, we've seen a high today of 102.24. That would set up, that's setting up what may be a nice sell pattern. Now, if it breaks above that, 102, let me put this back up on my screen here. Let's get back to light sweet crude. On the other hand, if you take a look at that trade, so we've got two patterns out here that would say if you close above the 102.93 level, number one, that that Gartley pattern will have failed, and you will be up above a resistance level, and that'll say, guess what? Light sweet crude is going to go ahead and motor on to much higher prices out there. So that's how that pattern is setting up, and it is Fantastic Friday, folks. Do a little dreaming. Here this weekend, and thanks again so much for joining us. I hope you had a great week. And I look forward to seeing you bright and early Monday morning. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.